Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. In the previous pre-market report, we were watching 43.5. Any failure to hold 43.5, I mentioned, suggested a move back down toward 34 and 24, and we continued to see that action yesterday. It wasn't very fluid, but overall, price did pull back and has continued to do so this morning. You see that we're still in an upward trending market, still stacked and sloped with the PIMA, still holding above the previous month's high and close. Everything continues to suggest more overall strength. However, the volatility is not there right now, and overall this just continues to hold within a range that is built out over the last few weeks. So not a whole lot of great activity or action at the moment. Price continues to be bullish as long as it holds above this 24 to 24.04 half key level. Any pullback into or shy of that zone would still be a buying opportunity for bulls until it fails to hold that area. But right now, price continues to hold in a narrow range. Very difficult to do any business in here right now, so I would be very, very cautious until we kind of get outside of range. So let's take a look here, at least on a swing basis. On an intraday basis right now, you'll notice, if I pull this over, price right now holding below the previous week's close and also the previous session's close. Here's the previous session's close, here's the previous week's close. Below both of those at the moment. Bears trying to keep that area offered, but we have higher lows heading into it. So any squeeze back above 36s here could spark a move back toward 43.5 for a retest. Alright, let's take a look here at crude oil. In the previous session, we were talking about the failure to establish acceptance above 45.20, and any failure to do so would suggest a push back to new lows. And so that's exactly what happened a couple of sessions ago. Monday, price tried to hold above 45.20, failed on 3 different attempts, and that sparked a significant continuation in the previous session. Price dropped into a low of 42.94 and now is outside of the 43.75, 43.76 low. And so retesting at the moment. This has been a clearly downtrending market, and we've been looking to fade new highs the entire way until we reach this low. Now once we've surpassed this low here, now it's time to start watching for signs of a rejection or some sort of rejection signature that may indicate we could pull back toward 48.75. We're not seeing that at the moment, so things are still in a downward trending mode until proven otherwise, but we're now in the zone where we can begin looking for a rejection signature that could bring us back toward 48.75 at the very least, and perhaps as high as 50.20 yet again. So right now, still in a downtrending market, 43.75 is very, very important, and we'll continue to watch that key level on a swing basis. On an intraday basis right now, you'll notice price quietly pushing higher. We had a low that came into play here today at 43.03, and since then we've had higher lows. Today we also have the EIA report at 9:30 Central, and that's going to be something to watch. Obviously, 43.75 is going to be very important. That's right where we are at the moment. Above that level can squeeze into 44.32s. Failure to hold 43.75 or any failed expansion beyond it, so say price pops above it and can't hold it, that would open up a retest of 43. Alright, let's take a look at gold futures. Here's gold. The higher time frame of gold shows a continued downtrending market. Overall weakness is expected still. Price has continued to push downward. Here's the 1250 FOMC key level from May 3rd. Price is holding 2 days below that level. Again, this would suggest more overall weakness ahead, likely back toward, as I mentioned before, 1229.70. This 1250 key level is very important. Any push beyond it could spark a stop run back towards 63.5. Any failure to hold above it would be another opportunity to drive this thing downward. So right now, a little bit of a digestion, couple of days happening here. We'll continue to watch 1250, but overall, the flow is still to the downside until proven otherwise. Lastly, the NQ The NQ I mentioned before, still in a very strong uptrending market, and right now you're building a range that ultimately will likely get a squeeze that results out of it. So at the moment, bears came in strong. Bears defended the first pullback, but a new low was rejected. Bears defended the second pullback, but no new lows. That is usually a recipe here for a squeeze. So again, as I mentioned, 5,800 is the big level to watch on a swing basis. Any push through that zone could then trigger a continuation to retest highs at 5,900 and for a push into the next upside key level, which would be 6,000. So we'll continue to watch this range right here as it materializes. Overall, an upside squeeze could be the next wave of strength that comes out of that level, could be to the upside. So we'll continue to watch this as we head into the rest of the week. All right, that's it for now. Good luck, trade well, and I'll see you soon.